Most forecasts suggest a modest weakening of the Canadian dollar against the US dollar in 2025. However, the extent of this weakening will depend on the interplay of several factors. Currently $1.44 Canadian dollars is worth roughly $1 US dollar. Factors that could weaken the Canadian dollar. Interest rate differentials. The Bank of Canada, BOC, is expected to continue lowering interest rates in 2025. Potentially more aggressively than the U.S. Federal Reserve. This widening gap between U.S. and Canadian interest rates could put downward pressure on the loonie, making it less attractive to foreign investors. Economic growth. While the Canadian economy is expected to grow modestly in 2025, it may still lag behind the U.S. economy. This could also contribute to a weaker Canadian dollar. U.S. trade policies. Potential trade tensions with the U.S., particularly if tariffs are imposed, could negatively impact the Canadian economy and the Canadian dollar. Factors that could support the Canadian dollar. Lower interest rates boosting domestic demand. Lower interest rates are expected to stimulate consumer spending and investment in Canada, which could provide some support for the Canadian dollar. Rebound in housing market. Lower interest rates should help revive the Canadian housing market, which could have a positive impact on the economy and the currency. Rising oil prices. If oil prices rise, this could benefit the Canadian dollar, as Canada is a major oil exporter. Key forecasts. RBC Capital Markets expects the USD/CAD exchange rate to reach 1.40 by the end of 2025. Where do you predict the Canadian dollar to be worth in USD by the end of 2025?